Also give the people time to come in. Okay, right, here we go. We are going to be talking about the multiple moving average chart setup in this week's educational webinar. And my name is Alex Deploy from Expert Forex. If you do have any questions, comments, remarks, anything like that, please send them through, and that will help guide me as to what areas to emphasize and pay attention to. Okay, so let's talk about these multiple moving average charts and how I started using these. Is that about 12 years ago, I started developing an interest in Forex trading and did a few courses and things like that. And none of the courses were just introductory ones at that stage. And I decided I'm going to do Forex trading for the rest of my life. At that point, in those days, there were no mini accounts or whatever, mini micro accounts. There were only main accounts. So we were all trading main account lots at that point. So it was the money was tight from the point of view that the South African rand had absolutely no value, and we were trading US dollars at that stage, and so we couldn't really trade big stops and afford big stops that you do need when you trade, let's say, the 1 hour or the 4 hour charts. You actually need huge stops. We only could trade like 15 pip stops and things like that. So we focused on short-term scalping, and when I say we, it was my wife and I. She's pretty sharp on Forex trading herself, and we developed a few moving average techniques, and in that process we said, now which moving average is the most effective? And what we then did is we put a number of moving averages on the same chart and to find which setting, in fact, was the most effective. And by the way, that's the way you work out what settings to use for your indicators. You just put a whole lot of them on and see which one's the best. So we did that, and then we looked at it and we said, gee, you know, these multiple moving average charts are pretty good. You know, they actually show quite a lot of information, and that's how we got stuck on this on these particular type of charts. Now, what you're looking at here at the moment are the daily charts, and we definitely didn't trade those. So I'm just going to show you. I'm going to show you the 1 minute charts. So here are the 1 minute charts, and unfortunately it was such a pity. I was watching this before the webinar, and there the break has in fact happened. But these are the kind of things that you can use, and we used to scalp the 1 minute charts. Using these multiple moving average setups, because they showed us what was going on. We could actually see what was going on in the market, and you can definitely see that's a trend, and it's an ongoing trend. That's a trend that's starting to reverse. That's a trend that's sort of thinking of reversing. That one's reversed, sort of also thinking of reversing, but maybe a bit stronger. That one's bouncing a little bit. So you can see immediately, and here's a trade happening right now. You can see a trend line violation happening, and one of the things you could think of doing at this point is selling at that point. So that's that's the type of thing we did, because we did using these charts. You don't need big stops, because you could have, like for instance, this transaction here. I'm not sure that this is quite a trendy market, so but you could just put your stop over there, you know, and that's not such a big stop. So especially on the 1 minute and the 5 minute charts. So that's how this little methodology worked, and it worked very well because it gave us some really high probability trades, but also ones with small stops, so we could have small stops and big targets, and that's what it's all about, isn't it? I see we've got a very quiet bunch in the room today. Please don't be shy to ask any questions or comments. But okay, so that's a bit of history. That's where it comes from. That's where this system comes from, and subsequently a number of people have sort of also noticed these moving averages, but the main reason is because they actually show what's going on. You can actually see the sentiment of the market in these charts. So let's go to the back to the and I'll go to the weekly charts, and it's quite easy to see the sentiments. The euro, for instance, with all the moving averages pointing up, is definitely still in a trending mode on the weekly chart. The Oz is definitely consolidating. I mean, you know, it's very easy to see that the pound was consolidating. It made a very nice, what I call a knot, and is now breaking out of that knot. And what you would have done is you would have straddled the triangle and taken the breakout. You don't need to know the direction, you just straddle it. Same thing here on the yen. The yen is definitely still trending. The CAD is trying to break out. It has, in fact, if you see where the price level is now, it has broken out of that. Now, those knots are basically what we traded. When the price knots like that, you know that it's building up. It's like an elastic band, you know. It's building up energy. The minute it knots like that, it's building up, and it's going to burst, and then you get this beautiful burst. We used to call it, well, when it goes down, we used to call it a waterfall. So you get this burst out of these knots, and there's a knot, and it's burst out of that. So you can see very clearly what phase the market is in, and trade accordingly. Now, that was the weekly chart. If you go to the daily, you'll see the same kind of story, trending upwards, trending downwards. But you see, those greens are pointing up. That one's starting to flatten off, so there's already a sign that it might be. And this one's starting to point up, so it's trending, but it's ready to make either a correction or a reversal. So you can read a lot of stories into these particular, and you can also draw trend lines and things like that. So there's the channel. It's broken out of it, and it's actually gone a long way if you look on the actual charts. Yeah, but what we do is we block out the actual charts. If you look at the actual charts, and I'll just put them on I'll put the bars onto just a light grey. If you see the underlying movement, it becomes a little bit distracting. So what we do is we block it out and make the chart. But there's the actual price movement. There we are. I've now done the grey, and you can see the actual movement, but I prefer not. So I would make that white. I don't like seeing the price because I want to see the underlying momentum and action that's taking place. So there we go. So boom, boom, boom. Where else? Here's a messy. You can see this is messy compared to the others. This is the Oz, but there is a form of structure in that this is a channel, and it looks like it might bounce there. That one's starting to curl a little bit, but not enough. But it's a bit of a mess. The Oz is a little bit messy at the moment, not as structured as the others. All right, so I'm going to just go to the 4 hour. I'm trying to give you ideas of how to read these charts. Again, when it's trending, it's easy, but when you get a leveling off of the green or a turning around, when it hooks, and let's see if we can see a hook here. I think the previous charts showed a hook. No hooks. No. There's a sort of a hook. But when it's flattening off or hooking, it's saying that I'm ready to, I'm running out of momentum, I'm ready to fall over. That one not quite, but I think you've got to admit these charts do give you a very strong signals. When the green hooks back and starts cutting over the others, then that's definitely a reversal signal. When it cuts over but is flat, like there it's flat, there it's sharp, it's flat, it will tend to reverse. So that little green line is quite an important one. The angle at which it cuts across is important because it shows the strength of the momentum of the move. So that's also a very handy one. And then what it also sometimes does is it cuts across, hits the second or third one, and then starts coming back. Now that's a continuation signal, and we trade it that way. So when it comes back and comes out of the consolidation there, then that's a continue. Like there, that's a continuation. So there's a lot of little signals that you can see in this particular setup. The charts, they confirm. We don't trade them directly, but they do certainly confirm our sentiments. So if the currency is trending, for instance, then we look for excuses to enter the trend using conventional charts. Let's have a look at a conventional. There's a conventional chart. We would then look for conventional signals, RSI, trendline violations, moving average crossovers, all those kind of more conventional signals to get into the particular moves. Okay, I think that's it. I think I've covered most of the. It's a very simple. The thing, if you look at our trading charts and our philosophies and things, it's very simple. And as I say, this is most probably 11 years old. We've been trading this for 11 years old. Haven't changed it one little bit. So when something works, then we just stick to it. It's simple. Gives us what we want, and it's been very nice trading it. So and the same thing here, very simple. We've only got the RSI, the moving average, and that's about it, and trend lines. That's all that we need to trade those. Okay, so let's go and have a look at the website. I think I've covered that. When they're all pointing in one direction, they're trending. When the green starts leveling off, then it's losing momentum and it will lead to consolidation. When it hooks back very strongly, then obviously it's reversing. And what you need to watch out is when they start knotting, when they all start making one color and are very tight together, then that's when these explosive moves occur. And there you can see it again, all pointing in the same direction. And all you have to do when they're not like that is straddle them. You don't need to know the direction of the move. All you do is just straddle the knot, and that's how we manage to survive with limited capital, trading a main account using very small stops. This is the method that we manage to survive on, or get started in. And then, as I've mentioned, when the green cuts over quite strongly at a sharp angle, then a reversal is more likely. If it cuts over at a shallow angle, momentum consolidation is more likely. And when it cuts into the other ones and then comes out again, that's a continuation pattern. And then it's used in conjunction with trend lines to either straddle or draw a trend line under support, and then when it breaks out of support, you just trade it. Okay, I think that's it. Let's have a look. No questions. That was a nice quick webinar. I hope I've been perfectly clear. I can see a lot of people are relying on the recording. They're actually listening to me and not watching me. The software can actually tell whether you are or not. Yes, so from me, Alex Deploy, thank you very much for your attention. and good trading. Oh, I must mention that we will make these profiles available, and the template on how you set up the multiple moving area. If you can do it yourself, quite honestly, if you've got the experience, you can actually do it yourself. But if you need assistance, you can purchase for a nominal $15. That's just really a nominal amount to get these two profiles, which the profiles compare the weekly, daily, 4 hour, 1 hour for a currency, and then the other profile is to compare all the currencies of a particular time frame. When you get the profiles, you can actually change all of this stuff. You can change this to daily, 4 hour, whatever you want to change that to. Right, so from me again, Alex Apoy, thank you for listening, and cheerio.